Good afternoon, everyone, and welcome to the Coming Back to the Caribbean webinar. My name is Julie Medley. I'm the Executive Director for the Urban Land Institute in Southeast Florida and the Caribbean. And this event was put together by our Caribbean Roundtable. I just want to mention that these webinars are created for our ULI members, and we thank you so much for being members of our organization. And we want to welcome all of the non-member guests who were able to join us today. We hope that you will consider joining ULI in the near future. We would love to have your involvement. We want to just take a moment to thank our District Council Sustaining Annual sponsors. You'll see their logos up on the screen and their names. Just a brief mention, we have our Leadership Institute program is doing a call for applications for mid-career professionals. And this is a program that will be starting in September. The application deadline is July 17th. If anybody is interested or has a good candidate, please feel free to reach out to staff, or Adam can put you in touch with the right person as well. We have an upcoming webinar. Of course, a lot of you know that you've been on a lot of industry webinars, and ULI's been certainly holding a lot on various topics. ULI Florida is actually putting one together on Safe Streets Now on next Tuesday, June 16th with famous urbanist Jeff Speck. So we hope you're able to join us next week. And now I'm going to turn it over to Adam Greenfader, who is the chair for our ULI Caribbean Roundtable. And take it away, Adam.
Great. Thank you very much, Julie. And I wanted to really this virtually, I think we're really finding a lot of interest, and we look forward to being able to do more of these. This is our second Caribbean Roundtable, and again, this would not be possible without our sponsors. And so just want to say thank you without going over all the names. It's most appreciated, and we look forward today to providing you with just some very interesting insights. We've got a cadre of amazing international speakers, and I hope that after today you'll have a little better idea from their perspective on how the Caribbean is going to open up, and in particular the hotel sector. Our agenda for today is pretty simple. It's going to be three parts. First part is we're going to have a brief presentation by the speakers. There's going to be afterwards a small Q&A, and then at the end we've received a lot of requests from our ULI members to do networking. And obviously networking is not the same in the virtual world, but we definitely want to facilitate it for you nonetheless. So we are leaving about a half hour at the end for you guys to be able to speak with the speakers, ask some questions, and do some breakout rooms. If you've not done a breakout room in the past, the only thing you really have to do is there's going to be a breakout button that's going to come on your screen at the end of the presentation. Just click OK, and you will be put into a breakout room and have the opportunity to ask some questions and listen in a more intimate format. Before we begin, I just want to put this conversation in context that we are really in the midst of something unheard of, completely novel. The pandemic has been particularly hard for the Caribbean region. And so I would just like to take one moment of silence and for all the people who have been helping us and working, and all the medical workers and everybody who's been affected by this terrible, terrible pandemic. Thank you. The Caribbean region relies on tourism more than almost any place in the world. I mean, GDPs in Caribbean tourism can go anywhere from 40 upwards to 80%. And the hotel product, which is what we're going to be talking about today, plays a vital role. Hotels are actually the lifeblood of most of these economies. So I think that what we're going to discuss today is particularly important for the Caribbean region. What I'd like to do is I'd like to have each of our speakers introduce themselves brief introduction and then maybe say something that you find interesting about the Caribbean hotel or tourism industry. So Nicholas, hello.
Hi, can you hear me okay?
Yep.
Great. Well, thank you for having me. And I do just want to say that I think ULI has been really exceptional during all this. And so I really appreciate all the programming. It's a time like this that you appreciate being a part of this kind of organization. My name is Nick Hecker. I work for a company called Sculptor Real Estate. We're a New York-based real estate private equity fund. We invest in opportunistic equity and opportunistic credit in both North America and in Europe. I've been there for about 15 years now. We're just starting to invest our fourth opportunistic equity fund. It'll have total capital commitments of around $2.5 billion. We have spent time in the past years investing in the Caribbean because a lot of what we do is focused on non-traditional asset classes. So while we invest in things like office and apartments and industrial, we spend more time investing in less traditional asset classes, be it all-inclusive resort, golf, marinas, gaming, cell towers. And so the Caribbean falls into that segment of our strategy. I think in terms of what we like about the Caribbean, what we like now, this is a time, and we've seen it survey after survey, leisure, everybody believes will recover before business travel. And it makes sense because when people are sitting at home, really thinking about what their priorities are, you're seeing obviously a huge focus and talk about work from home. But I think right behind that is a focus on leisure time and vacation and travel. And so I think, the Caribbean is obviously over the long term, very, very well positioned to capture that demand.
Great, thanks. Alex.
I'm sorry. Hi, Adam. How are you? How are you all? Thanks so much for having me. It's very interesting, and this is what I like to do most, which is the hotel business in the Caribbean. So I'm Alex Os. I am a chairman of Apple Leisure Group. Apple Leisure Group is a vertically integrated company where we have distribution companies. We have 6 different brands, B2B and B2C, Apple Vacations, Travel Impressions, FunJet, Chip Caribbean, United Vacations, and Southwest Vacations. But we also have a hotel company called AIM Resorts. We have different brands, Secrets, Dreams, Sunscape, Zoetry, Breathless, etc. We have close to 80 hotels, most of them in Mexico and the Caribbean, but we also have 20 hotels in Spain, all inclusives and all on the resort side, all on the beaches. But we also have another important company, which is a big destination management company. And overall, we are the largest customer to the Caribbean and the largest customer to Mexico, sending close to 3.2 million passengers every year from the United States to these destinations. So, of course, in the middle of all this pandemic, and we know that it hit us first in tourism, and it's going to take longer for us to recuperate than to anybody else. So this is an effort that we're only going to be able to do it combined, and particularly in the Caribbean region where the local market is very small and the driving market is almost non-existent. We depend on each other. We depend on multilateral agreements, not just from the standpoint of policies in between countries, but also airlines, etc. So we depend on each other. So really hope to work together and to spread this sense of community that we are in the Caribbean. Either we all combined make it happen, or it's not going to happen. Thank you.
Thanks. Hey, Chris.
Thanks, Adam. I appreciate it. Julie, thanks as well for having us here. Great to be part of this roundtable with ULI. I'm the Chief Operating Officer for RevPAR International. We're a boutique hospitality advisory and asset management firm headquartered in Washington, D.C. I am based out of South Florida and take the lead on all of our Caribbean work that we've been doing over the course of the last, I guess I've been with the firm pushing 20 years now at this point. What I like about the Caribbean and what I've enjoyed about the Caribbean, beyond the fact that it offered me my first hotel job 25 years ago on a very, very small island off the coast of Puerto Rico called Culebra, but it has shown me, you know, different parts of the world. I think one of the things that I've really enjoyed is obviously meeting and interacting with, it is so many different cultures and different people. It is a really truly global destination. Even when you're on smaller islands, in some of the hotels that we asset manage, we've got as many as 60 or 70 different countries represented in terms of the labor force. So it is really kind of a microcosm of the globe, whereas that you don't see elsewhere in such small kind of intimate destinations. They really are quite unique.
Thanks. Hey, Christian.
Thank you for everyone, and thank you for ULI to put this webinar together. I'm Christian Shaw. I'm with CBRE. We are the largest commercial real estate company in the world, and a public company. My specialty, I'm based in Miami. My group, we focus only on the hospitality product. So CBRE might be known for various type of real estate, selling offices, leasing offices. But my team and we are absolutely focusing on the hospitality industry. Furthermore, the Caribbean for us, being an intermediary in transaction in the region, represent about 50% of our business. In the last 4 years, we transacted about 1.2 billion just in the Caribbean. So it is a region we love. It's a region that we spend a lot of time. We know many of the island. We interact with everyone on this panel. And it's definitely a love that we have for the Caribbean. In my previous life, I did work in operation. I lived in the Dominican Republic for a while, and I live in Antigua also. So it's dear to my heart. The Caribbean is a place where I want to see the islands thrive, or business thrive, and uplifting the economy of all this country really relies a lot on the hospitality industry. So it's a labor of love and passion for the Caribbean who brought me to Miami and work in this region.
Thank you, Christian. This is just very well said. I think what has come through is that we are a truly international group of individuals. Merci, bonjour, y gracias for everybody. We've got representation from the Cayman Islands, from St. Thomas, from Tortola, from Puerto Rico, Dominican Republic, Dominica, Turks and Caicos. I mean, it's really about, it's a global experience. And I think that today we're going to really hear from a lot of different industries and get a good feeling for how we're going to come back even stronger. So I'd like to kick this one off with Nick talking about capital markets, and just tell us a little bit about what's the state of the market, what's going on, what are you guys busy doing?
Perfect. Sure. Thanks, Adam. I don't want to repeat a lot of the things that I'm sure others who are a lot smarter than I am have already talked about capital markets over the past several weeks and months, but a few things that we're focused on. One, there's a really interesting dynamic here, just thinking about this relative to the global financial crisis, where there's so much more capital still in the markets than there was back in 2008. And so, after an initial shock, as soon as the Fed stepped in and basically told the market that they would essentially do whatever it took to guarantee stability in the capital markets and soundness of the banking system, you have seen this influx of capital back into the public markets. But what really stands out to us is how bifurcated it's been. And not to be overly simplistic, but I do think you can kind of divide it up by size, where large public issuers, and public meaning either US public companies or private companies that might have public or traded debt, have had a much, much easier time attracting capital than everybody else. And you've seen even the most troubled asset classes, something like department stores. Big chains have been able to go out and tap the capital markets. And that doesn't really exist for owners of single assets of hotels or resorts or really anything else for that matter. And so if you think about how that impacts the Caribbean, there is this real bifurcation between owners of large portfolios who have access to US institutional capital markets, and the owners of the one-off single assets or smaller portfolios that either have a local banking relationship or a small syndicate. And I think it's important to distinguish between getting some relief or getting temporary forbearance versus actually being able to raise new capital. Pretty much everyone across the board has gotten whatever degree of forbearance that they've needed for some interim period. The big question is going to be in a few months when that wears off and when there's a need for new dollars to cover operating costs, hopefully fund startup expenses at some point in time, what markets are available to tap. And again, I think this bifurcation between the larger, more institutional companies that have tapped the US public market in the past are going to have a much, much easier time of it than those that have sort of local banking relationships. And that latter category is a big, big component of the resorts in the Caribbean. So I think that's something we're very focused on. In terms of what we're spending time on in the investment opportunity set going forward, I think, firstly, as a lot of people have observed, it's not like there is a huge amount of private deal flow just yet. And so we do think generally this is going to be a more medium to long-term opportunity set. This isn't just a few months. More broadly, in terms of what we're looking for in deals in the Caribbean right now, or how we start thinking about investing in this environment, typically when we're investing in a hotel or any other asset, we do a lot of diligence, we build a complicated model, but at the end of the day, the most important thing that we focus on is really one page in our investment committee memo. It's our page of highlights and risks, and we weigh those, and we think about the returns that we're generating relative to those risks, and do we think it's an attractive overall package. And a key question for us when we're thinking about that dynamic, are the risks in a deal something that we actually can underwrite, that we have some sort of expertise or qualification to be able to underwrite. And when you think about the risks in a typical real estate deal, maybe it's construction risk, risk of new supply, cap rates increasing over time, labor costs, those are all typical. And those are the kinds of things that we can look back over many years and many cycles to be able to make informed decisions when we're projecting out future cash flows. They may not be the right decisions, but they're based in some set of data and some set of objective criteria that we can look to. I think when we look at that set of highlights and risks today, it's a much different animal in the Caribbean especially. And so that influences how we think about the opportunity set, and as importantly, what the return targets should be for our capital. The highlights are actually pretty compelling now. You have significant pent-up demand. As I mentioned, general consensus is that leisure will recover before business travel. There is still supply to come online that's currently under construction, but after that, supply sort of cycles through. It's very hard to see a lot more new supply coming online anytime soon. And again, the Fed has gone out and said interest rates will be zero sort of indefinitely. But when you then shift and look at the risks, there are a lot of things that I put in the category of very difficult to underwrite, and things that, you question, are we really qualified? Are these the kinds of things that our limited partners expect us to be underwriting? And something like timing of a vaccine, is not something I have any experience underwriting. When and how does airlift return? There are so many potential variables around that. How will consumer spending be impacted by everything that's going on over, again, the medium and the long term? Very atypical risks for real estate investors. And so with that backdrop, how do we think about investing? What do you actually do? I think the punchline is to underwrite very conservatively. Assume the worst in terms of recovery timing. And so should there be a full recovery in a year or two, that's obviously great, but I don't think that should be the right base case for somebody investing in underwriting an opportunity in the Caribbean right now. We want to be in a position where if things take 5 years or longer, we may not make a great return, but we're not going to lose capital. I think related to that, we're very focused on basis right now. And one of the things that we focused on historically in the Caribbean is investing at very, very deep discounts to replacement cost. So we're always at a basis where, while we may not predict the year right or sort of little movements, if we look back over many years and many cycles, we feel comfortable that we're investing, we own an asset at a basis that is supportable based on where things have traded over long periods of time. We also don't want to be taking any more risk beyond what's already in the market on something like airlift. And so, you know, on the one hand, a San Juan, a Cancun, airlift will always be there in some form or fashion. The islands where there's been one subsidized flight a day, we worry a lot about. And I put that in the category of risks that you just, there might be no return that you would want to get paid for that kind of risk in this environment. Similar with just general jurisdictional stability, something we always focus on, but I think even more so now. Staying in the countries, the islands that have a really proven track record of stability, rule of law, I think is as critical as it has ever been. So when you look at all those factors, then you focus on, well, what should returns be? And, you know, clearly, when we think about it, they should be higher than they were. For all of those types of risks, you shouldn't be doing it to earn an 8 or something like that. Now, going the other way, even to the extent there was always less leverage in the Caribbean, there's that much less leverage today. And so that's a little bit of an offsetting factor because we focus on risk-adjusted returns. And so if we're making unlevered investments, obviously the return target can be lower, but in general, it should be elevated for all the inherent risk that's in the market right now. So I think just in conclusion, we are certainly looking at investments in the region. We're excited about opportunities in the region. We think it's very early. We will stay focused on major markets with historically strong airlift, stable governments, and really we'll focus on generating attractive unlevered returns at very deep discounts to replacement cost. That's sort of how we're thinking about the investment opportunity and a little on the capital market as well.
Very, very insightful, Nick, and we'll definitely be back with some questions to you on some of those returns and operational risks. Alex, you know, you guys are on the ground. You're really trying to make, you know, operational changes so people feel comfortable. And I guess the question to you, Alex, is, you know, what's the hospitality industry doing to come back online, to make tourists feel comfortable? And just as a side note, I'm in a hotel. So I wanted to say that I'm a business traveler and I'm in a hotel and I feel great. And whatever you guys are doing, Alex, it's working. So, you know, please share a little bit with us.
Thank you. I don't know how good is your view because the curtain is closed, but I hope we have a nice one. No, of course, there's many things that we're doing, and it is a lot of what we start to do as companies and then as islands or as destinations. But it's more important about how do we do together. And this is something that, again, particularly in the Caribbean, it's not so much because you depend so much on everything that happens outside of your island. You have to work in combination with everybody else. But of course, the biggest concern we have now is the confusion that reigns in the market. I mean, for the consumer, doesn't know what to expect when go from one country to another country. They don't even expect to go from one place to the other. The protocols are not the same. And I think we're doing a good job overall, particularly in the last 3 or 4 weeks, to try to combine or implement common protocols and speak a common language to the consumer, because that's uncertainty, the confusion in the consumer, what it's really killing us and it's going to hurt the recovery. So we are trying to unify these protocols. In the WTTC, we're trying to do it through speaking first to the G20 countries that represents about 80% of the tourism worldwide. And once those protocols are implemented, by the way, they're public and for everybody to implement now, every island should go to those protocols and should get the stamp of safe travels. So the consumer starts to understand what that means, what type of experience I should expect when I go from my city or my country to this other country, and not to think, okay, yes, this is what I should expect when I travel here, but I'm not so sure when I travel over there. One of the reasons why the recovery after 9/11 took so long is because every country and every airport had different protocols. And in some places you had to remove your shoes, or you had to take out the laptop, and then the liquids came up. In some of the countries you don't have to remove your shoes. And as long as the consumer doesn't know what to expect, that uncertainty remains, and that really going to make our life difficult to recover. But yes, of course, we as a company, we're implementing the protocols. We decided to go with the WTTC protocols. They are expensive, but those protocols are, number one, effective. That's the most important thing, because they really work and protect the health of the customers and the employees. Number two, affordable, because there's some protocols that would be so expensive that they won't be practical to implement. And number three, very important, they're not invasive, or they're at least invasive as possible. That's so important that the customer continues to have a good experience. But hopefully, those basic protocols would be the same from island to island in every different destination, so the consumer knows what to expect. Unfortunately, some companies and some countries, actually, in some destinations, are taking these protocols as a competitive advantage. They say, you know, I have these protocols in my hotel. They actually even name them with different way, like a selling catchy name to those protocols in my hotel company. So when you make a decision, you stay with me, because with me, you're going to be safe rather than staying with somebody else. And an island does the same, or a destination does the same, but staying in another destination. I think today it's not about competitive advantage. It's about reactivating the industry. We all need to speak one common language. And then once the consumer starts to travel, then we can think about market share. We can think about what is unique to our company or unique to our island or to our destination. Right now, it's not about that. It's really about, let's make sure that whatever we're saying to the consumer is consistent, that it makes the consumer feel good, and then that when they experiment the travel, it works. And very important, the experience of the guest, because some of these protocols could be so invasive, and we see some crazy measurements that some countries are taking, like the United Kingdom right now, where you have to go in quarantine for 2 weeks if you leave the United Kingdom, or if you go to the United Kingdom. That obviously is not going to work for tourism at all. But if the protocols are invasive, what is going to happen is that the consumer finally coming out of this confinement, wherever they are, most people in their homes, and they still going to spend the money. They're taking the risk, and they finally invest in us. And when they come and finally test the product, they don't have a good experience, because they have to wear a mask all the time, because the beaches are restricted, the pools are restricted, the restaurants are closed, the bars are closed, etc. If they don't have a good experience, we're not going to have good ambassadors coming back to the country, speaking to the friends and families and saying, I had a wonderful experience, but also I felt safe. So I think that's very important. We should all be determining, particularly in the Caribbean, we can start by doing this as a region, which are the protocols and how we're going to communicate those protocols and make sure they're consistent. And then we need to develop this strategic alliance with the most important markets, whether they're bilateral or trilateral, multilateral agreements, so we can create these bridges of traveling from one place to the other, because the world is going to be reopening. It's already reopening in different phases. And of course, the Caribbean depends in very specific markets. And I think those are the markets where we should be concentrating all our efforts to open up. So that's what we're doing, and it's going to take some time. I mean, I agree with Nick. This is not a short-term thing. It's going to change the new projects, the pacing of the new projects. I see very little new things coming up, but there's a lot of things under construction that are going to be finished. So there's going to be more supply and an environment where the universe of customers worldwide, if we're lucky, in 1 year from now, it's going to be 50% of the size that it was a few months ago. So it's going to be very, very competitive and very, very difficult on the new environment. But of course, the recovery is going to come. It's just going to take time.
Very, very key, I think, what you mentioned about reactivating the industry as a whole. And I definitely want to hear some more comments later about that. I mean, it's if we stick together as the Caribbean region and we act as a region, I think we will see some great returns. And speaking of returns, Chris, ownership right now, the groups and the people that own these hotels are faced obviously with an insurmountable task. I mean, a lot of costs now are being thrown onto the balance sheets to secure the health of the guests and be able to create new protocols. But what about profit? And how in this cycle is ownership going to be able to figure out new ways to make money and to go forward?
Yeah, Adam, thanks. I think the most important thing that we've seen, we spent the first couple of months, I'm sure as Alex did, going through cost containment measures, trying to determine what various ownership groups were going to do with employees. We had some cases where ownership groups stepped up and really supported the employees and looked to support them through relief pay over a period of time. Other ownership groups weren't in the same position and were just looking to reduce their costs as much as they could as quickly as possible. So it's been a bit of a mix over the last couple of weeks and during the last, or a couple of months, and during the last couple of weeks, we've really been focused on, to Alex's point, is what are the costs and what are the long-term impacts of these protocols? I mean, in some cases, we're looking at a 50 to 60% reduction in seating capacity in restaurants or in meeting space venues. And when you've got a hotel that was built, you know, to accommodate kind of 30, 40% group business through the year, and host groups of 200 or 300 people at a time, and all of a sudden you're down to 100 people, it's a very different animal. So it's how do we retool, how do we assist the sales and marketing team and give them the tools that they need to go out and kind of refocus their efforts on the new marketplace. So at least initially it is a focus on transient. And this has been across different hotel chains in different markets. We're seeing different responses. You know, it is a focus on kind of higher end customers, at least initially, that are going to be willing to come back, making sure they feel comfortable, to Alex's point. But at the same time, also ensure that this, you know, when we're looking at a luxury hotel, the idea of putting up giant plexiglass all over the lobby and stickers on the floor and stuff like that, we've got to, you know, massage that protocol to fit the product, because that's not necessarily going to make everyone feel comfortable. Then there's costs too. I mean, all the brands have come up, to Alex's point, all the brands have come up with their own different protocols and different requirements. And in some cases, there's some significant capital investment that they're requesting that owners make. And we don't know how, if they're all going to work, or if in 2 months' time, we're going to just take all that stuff, put it in a closet and put it away. You know, in some cases we've had, you know, management companies coming back and looking for, you know, a couple $100,000 worth of equipment just over this short term to fill out the balance of the year. So those are some of the things that we've been working on vetting and trying to understand. And then the other thing is this ongoing issue with employment. In some cases, we've had employees that can't get off islands. They've been stuck on islands because they're relying on expatriate labor, whether it's in Cayman or Anguilla or other places around the Caribbean, and it's just a matter of getting people home. But now we're looking at, okay, when we start to ramp back up, does it make sense to just keep them here as opposed to sending them home at this point? So it's been a mix of things, and I think the last and most important thing that both Nick and Alex mentioned is Lyft. We continue to be very concerned about what the future of Lyft is. You know, talking with some folks in the U.S. Virgin Islands the other day, you know, they're one of the first islands to reopen and have direct access because it's a domestic market in the U.S. But they indicated that the number of seats that they've got inbound is about 20% of what it was prior to COVID. So they've got hotels open. They can't fill them because they don't have enough seats. And then the other thing that we're seeing as well is, even you look at Southwest Airlines, they've come back and they're not going to reopen their Fort Lauderdale hub here into the Caribbean for a couple of months, if not into early 21. And they're using the excuse of the TSA shutting down their customs, or the customs office shutting down their hall in Fort Lauderdale and forcing them to use another terminal. But in reality, it's a bit of demand issues as well. So those are the primary issues of dealing with this kind of short-term impact of what kind of capital investment is going to be required, and then also what we're going to do with Lyft. And finally, I will say that, you know, I think some islands are reopening a little bit, are being a little bit more cautious, particularly with their reliance on the U.S. consumer base, where they've had relatively low number of cases. And they're kind of caught in this conundrum of, well, our consumer base is the U.S., but they have a huge number of cases. We have no cases here on our island. Do we open up? And a lot of islands are being put in that decision-making quandary. So that's a challenge as well.
Hey, Christian.
Yes.
We've heard different points of view. We've heard capital, we've heard operations, we've heard, you know, looking at, you know, transactions from the from the ownership side. Are deals getting done in the Caribbean? I mean, what's the transaction environment look like today?
Good question. I mean, if you would have asked me that about 3 months ago and tell you that all the markets would have closed and we would be where we are today, I would have never picked the Caribbean to be the first one to market transactions. So as Nick said, I mean, the big difference between the GFC and today is there is a lot of capital floating around. And having this capital, as opposed to, the GFC, we saw the bank disappear. There was a lot of pain in the capital market. In this case, the outside, I guess, issue of the virus just came from nowhere or from China and took us by surprise. But the capital and liquidity was very much there before the virus. So this liquidity is still there. A lot of capital is chasing. They were tooled and looking at more, distress opportunity and try to place their capital. But the good news is there is capital floating around, and the Caribbean is not immune, and I suffer like everyone else. But there is still interest from a large, for people interested in the Caribbean, there is interest. And, all the transactions we're doing between the US and Latin America and the Caribbean, the first closing we had was 2 weeks ago with a transaction of selling the Jewel Dunn's River and the Jewel Runaway Bay for Playa. Playa was our client, a public company. They decided to go ahead, even amid the virus, to go ahead and entertain offers. And very quickly, the players in the region came up, and we're very quick to take advantage of the situation. So our transaction happening in the Caribbean, yes, we have another one in the Bahamas where we are put under contract, and there is a discount. So I can share with you in terms of metrics that if you were looking before, in general, if you were looking before pre-COVID and pricing after COVID, in the Caribbean, transaction getting done all cash because financing is still very much difficult. The Caribbean is always difficult in terms of financing, but the COVID added on a layer of difficulty there. And we were able to transact these two properties as the same as in the Bahamas, which is under contract, and looking at offers on other property that we have. We are marketing property in Anguilla, we're marketing property in the DR. The overall, I would say, discount in the region is 30 to 35%. So, and, for buyers who have the cash, cash is king in this difficult period. And it's not like the normal transaction where you get a lot of due diligence and a lot of time to close. The winner of this kind of transaction are very quick. It's like within 30 days or less, they can come up, write a check, no contingency, and buy the property. And why they can do that is because they're compensated by saying, hey, as Nick pointed out, I'm getting a discount to replacement cost. I know the tourism is going to come back. I know people are going to travel again. And I'm taking the opportunity to buy something all cash at a discount. So there's, the risk factor is diminished because your base is so interesting. As Nick pointed out, you can wait 5 years, but you feel very good about the basis and the replacement cost of what you bought.
So I guess we're hearing that there's interest continues in the Caribbean, and obviously there's new parameters now on risk and rewards. And this is a group question, for any of you gentlemen, when do you really see recovery coming back to the Caribbean? Is this something that's 1 year out, 2 years out, or is this something that you see, the type, coming out, into the future, 3-4 years? I mean, do you have any idea or perspective on that?
I'm sure Alex has probably got the best perspective on it, but I can tell you, just from looking at a handful of hotels, the balance of 20 is obviously going to be a challenge. And 21 Q1 is really where we're kind of focused to get an idea of what what's really going to happen. The concern continues to be with group. We are seeing positive transient trends, but group is a really unknown factor. We've got one hotel that has seen a huge uptick in group pace, and a lot of it has to do with relocating demand out of 20 into 21. So how much of that holds, we're not sure at this point. We anticipate that some of that will eventually fall away. And then we've had other hotels that have just seen all their group pace kind of completely fall apart. And so, you know, it's really shifting to a full transient model away from group over the short term.
Yeah, I don't know why you say I would have a better perspective. Probably more worry, but it really is going to vary. I mean, it's going to vary from country to country. I don't see by no means any type of recovery before the summer of 2021. And when I'm talking in terms of recovery, we tend to think, when are we going back to profitability? When are we going back to see things the way they were before? I think that's going to take a lot longer. I think that if everything goes fine and there's not a new outbreak and there's no vaccine, because that's very important what's going to happen in the future. But let's say there's no vaccine yet. I think that Q1 of 2021 is still going to be very shy. Actually, the whole the whole trimester is going to be worse in 21, significantly worse in 21 than it was in 2020. Q2, it should be better. But I think overall the year, if we're lucky, we'll reach probably 50% that it was in 2019. And then eventually it's going to be recuperating. But it really depends, because some of the islands, for example, are very highly dependent on certain markets. So those who are dependent in the short term from the UK, for example, they're going to struggle based on the policies that the UK is taking. Some those that are more dependable on the USA, and we're in the USA, obviously, despite that they depend heavily on the connectivity, but it's going to have a different recovery time, because long haul, some of the islands depend greatly on European markets, and the long haul is going to take longer than the short haul. People are going to start traveling regional before they start traveling long haul. People are going to try to avoid being for more hours within the plane, and it's obviously going to be more expensive. So Europeans are going to travel more within Europe before they start coming back to the Caribbean. So it really depends which island, depends to which market, and in also on what's the capacity for that island to manage an outbreak. If it comes again, do you have enough hospitals? What's your tracking record of handling the pandemic during the time? So that perception is going to be a lot. And also very important is marketing, where the promotion is going to be. I'm not suggesting that we should come up with a campaign for the whole Caribbean. I think that has pros and cons, but I do believe that marketing, how we're going to position ourselves to put ourselves on the map before our competitors do, once the whole industry is reactivated and ready to travel, I think it's very, very important. Everybody's going to be cutting costs, and cutting costs in marketing and promotion during this time, I think it could be detriment to the recovery.
On my side, I'd say, I mean, we have a big research, CBRE, we have CBRE research, and every week we analyze a lot of data, you know, a lot in the US, and the pattern of travel. And I agree with Alex, you know, it's going to depend on the vaccine. It's going to depend on how safe people are going to feel to go regionally. I mean, you know, hopefully we don't have a situation where you have a big breakout on an island, and you have a situation that you've seen with the cruise industry where people cannot go back home because you've got a big outbreak on one of the island, and the countries don't want to receive people back to their homeland. So I think it'd be very important in the Caribbean to be able to control through cleanliness, to what needs to be done to receive tourists, because the consequences of an outbreak in the region on one of the islands could be detrimental for the whole region. And as we've seen how badly the cruises had to deal with this situation, I mean, still people, you know, on a cruise ship unable to go back to their homeland because of the that could happen on the, hopefully not, but it could happen on an island. So you don't want that to be a trend. And I think I agree, 2021, the first quarter is going to be pretty weak compared to 2020. And when we talk about terms recovery, we need to define recovery. I mean, I think if we're looking at when do we go back to 2019, which was a record, by the way, a record year for the Caribbean. 31.5 million people traveled to the Caribbean in 2019. It was the biggest year ever. So when do we go back there? I mean, I think I agree with Alex, probably 2021 will be, marginally profitable with 50% of the business we have in 19. But I think 2023 is probably the year when we see the business being back to the level of 2019, assuming we have a vaccine, assuming we don't have an outbreak, assuming that the airlines are traveling back to the islands.
I guess the only thing I would add to that is that, I don't know if you call it a silver lining, but for better or for worse, there's no other region that has as much experience getting shut down and then reopening as the Caribbean, and whether it's hurricane, virus, sargassum, whatever else. So just from an operational standpoint, there is a history of looking at the time between when an event like that happens, how long till full recovery, and then operationally, I think operators in the Caribbean have gotten better than pretty much anyone else in the world at going through these things and reopening, restaffing, figuring out how to manage dollars. So it's trying to hit a moving target a little, but I actually think this region is somewhat uniquely positioned from just a strictly operational standpoint to go through the shutdown, reopening, how to ramp back up, how to train and hire and deal with airlift slowly coming back. But it's very much trying to hit a moving target.
Yeah, I couldn't agree with you more. I mean, the region is extremely resilient. And if we are talking about these timetables, 221, 22, 23, from a development perspective, a lot of our ULI members are developers or work in development, and kind of looking at the landscape and saying, is development going to continue? And if development is going to continue, are there new opportunities that this has brought in terms of the product type or the way that the development is phased in? And this is, again, a question for the group. I mean, do you guys see development, completely being put on hold, or are there going to be some niche developments coming on in the near future?
I mean, candidly, we have a client that's going to continue to pursue a minimum of one project, if not two projects, over the course of the next few years. They view this as an opportunity to just kind of put their head down and keep going. They know the market's going to come back. It's going to take them, a minimum of 3 years from now before they can open the doors. So they're proceeding. Obviously, there are a number of other clients that have just kind of put the project on the shelf. And I think a lot of it has to do with, to Nick and Christian's point, is financing, or how well capitalized they are. If they're financing the project on their own, I think some of those developers are continuing it, but the ones that are out looking for financing are probably gonna have to put it on the shelf for a while.
I agree with Chris on, and there's going to be opportunities and people that will continue to think that by the time I open my hotel, because we know these projects take a long time to open, by the time I open my hotel, things are going to be in a better spot and I'm going to do fine, even though the profitability is not going to be as good as it used to. It doesn't matter. It's still going to be profitable and I'm going to do fine. But I think it really depends how they're going to finance the deal, but the opportunity cost of the money that they have to put right now to start construction is going to be significant. And they're going to have to consider whether they have to put that money to work on a new project versus taking the same amount of money and investing in a distressed asset that there's going to be plenty of, unfortunately, but there's going to be plenty of, and then how my profitability is going to look like. So I think it's more about the opportunity cost. If I have the money now, where am I going to put it, rather than putting in a new project that I know I'm going to have to wait those 3 years for sure. But in my case, my experience, I see a lot of the new projects coming for start being delayed or at least postponed for the moment. And I think our investors are more focused on, okay, what opportunities are there? Let's consolidate what we have. we're putting more money in existing hotels as well, by the way, because we're taking this time to remodel, refurbish, and come up with a better product, which is also important, but also see what opportunities are going to come out there on the market after this crisis.
I agree.
I mean, there are still some half-built projects from the last cycle that are hanging out there, and so it's a region where there will always be a handful of high net worth people that can build all cash, but I think supply will go down a lot, and I don't think that's a terrible thing, because if you look over the past couple of years, in places certainly like the Yucatan and Punta Cana, you know, one of the things that was impacting those markets was oversupply, and so just taking some time to absorb what's there now is probably not the worst thing in the world.
That's absolutely right. And just the other quick thing that we have to take into consideration are going to be rates, because we're talking about traffic. How long it's going to take for us to bring back the number of traffic, the millions that Christian mentioned about travelers going to the Caribbean. But in reality, I mean, one area that is going to be hit badly are going to be rates and therefore margins. So that's going to take longer to recuperate than actually occupancies. So that changes the whole game.
So I guess what I'm hearing is that additional operational costs, we're going to see a lot of assets that might go into that distressed market. And then specifically, you know, the Caribbean is owned by a lot of local managers, right? A lot of local owners versus the US. And I mean, is there going to be any kind of additional challenge for these local owners and any way that in particular that you see that, you know, that a group like ULI can be of assistance? I mean, how can we as a group provide some kind of value added for a lot of these islands and a lot of these owners in these trying times?
I'll talk. I think the challenge, I mean, well, one of what Alex and Nick said, I mean, some of these projects are going to be mothballed, and I think there need to be a method to conserve capital and also to conserve the asset itself. So ULI has a lot of architects, has a lot of project development. So I think instead of leaving I could see ULI being involved, instead of leaving the building, you know, to the air, having a method to say, okay, we don't going to finish the construction. We're gonna, you know, keep it as is. How best can we preserve what we have, our investment, basically? So I think there is some opportunity there for members to look at how to best prepare a mothballing a project before just leaving the construction site. That would be one place. I mean, as Nick pointed out earlier, I mean, yes, there's a lot of individual in the region. We have 1, 2 hotels, and they're not well capitalized. So that's a bit of a challenge. And now they may have to look outside to what we call rescue capital or finding a solution how to carry on and not losing. The good news is, in some ways, there is some opportunity in the Caribbean. Is many of these projects are not over leveraged, because Caribbean traditionally has never seen the kind of leverage you get in the US, you know. So there's still equity. I mean, even if you go down 30% in value, financing is usually 50%. So you still real equity for an owner in their property. So I think what we probably should announce is, you know, they finding rescue capital. You know, it's better to bring somebody with some returns and save your asset for in the short term than to let it go and give back the keys to the lender, because there's still equity. In the US, you have higher leverage. You know, in some situation, you do have all the equity has disappeared, and really the lender is the owner at this point. But in the Caribbean, where I see all these hotels with lower leverage, I think there is still very much equity into their deal, into their operation, into their assets, and they should do everything possible to keep the asset and find capital to carry them over for the next couple of years.
I would add to that, just on the capital market side, and sort of how to get over the hump of, for a single asset owner that isn't in the U.S. capital markets to raise capital, you know, use ULI to call someone like Christian. This is not a time for a single asset owner to try to go raise capital on their own. Take advantage of all the ULI members that are in the finance community, in the brokerage community. And there's a huge difference right now for someone who picks up the phone and calls Christian or a CBRE to try to find some money to recapitalize, to cover some carry costs and some reopening costs, than to just do it in sort of less of a formal process. The capital is there, but it's very, very fickle right now. And so the more help you have from someone like Christian, I think this is absolutely the time to be tapping into those types of resources.
You're breaking up a little bit, Nick. I could hear you. I think part of the message that I was able to understand was to be able to use resources from a group like ULI, if you are owner of individual hotel properties, to go out and to leverage that network that exists. I received a question here from Terry Hanton, and this was a question specifically targeted at Christian, but anyone can answer. Christian, you mentioned that this 30% loss of value, the distress assets, and the question is the loss of value of 30% related to distress assets, or is it lower NOI and higher cap rates?
Well, I mean, majority of the hotels are closed in the region. So people are looking at the 2019 performance, and they do factor, there's two things they factor in. Is the recovery, how long it's going to take, 3-4 years to go back to the 2019 level. And the other part that we didn't talk about is a carry cost, or what we call cash burn. All these hotels are closed, but it's not like they're costing nothing to be closed. Alex can talk on the operation side, but there is still a cost, having an hotel closed. So all these companies and owners have to funnel cash to the property to have the hotel closed. It can be in some, $300,000 to $500,000 a month. It's not nothing. I mean, it could cost you $5-6 million a year just to keep the hotel closed and maintaining your assets. So all that has to be factored in. So it's not question people come in and there's no method to it and say, well, I'm coming down and I'm going to pay you 30% less. I mean, there is an analysis behind it to arrive at these numbers, and is to take into consideration how long the run. I mean, it goes back to the return. I mean, you're solving for a return for your investment, taking into consideration the risk in the region, and you have to factor in how long it will take, and the cash burn or the carry cost that you have to take on the moment you buy this property. It's the opposite of what we had before. You buy a property and now you have to write checks. So, all that takes into consideration. So I don't know if I would call, it's not distress, it's really this same analysis. As we get away from the crisis, as the hotels are reopening, the island are reopening, these discounts going to diminish, right? I mean, people are going to do, okay, I'm open, I can cover my costs with 30-40% occupancy, and that will solve a big portion of it. So it's at that particular moment, people, I mean, you always have this equation, people or investors are taking advantage of what's happening now. And it's, the buyer and the seller have to meet somewhere. In the US, there's, very, very, no transaction, because the bid and ask is still, there's a delta. So the market is not so much different as the Caribbean. Buyers are looking 30 to 40% discount. But the seller, on the other hand, they realize there's a discount, but they're more in the 10 to 20% range. And the lender are the same. So there's still a pretty big delta between bids and ask, and is why no transactions are occurring, because there's still this delta between what people think they should be paying and what sellers think they should be paying.
Yeah, I'm sorry, just to that point, it's true, Christian, not only the hotels cost us a lot of money to keep them closed, but we need to invest money to reopen them, because every time we open a hotel, we require working capital, significant working capital, in order to reopen, like any hotel opening, right? So in this case, it's not just the money that we left up on the table, the money that we didn't win in 2020, it's what we didn't win plus what we lost, the money that we have to deploy in order to keep the machine running while it's closed, and then adding more money to reopen the machine. So the key is, when will you reopen? Will you reopen even at a loss, or will you reopen until you have enough occupancy to hit at least break even? In our case, we know we're going to lose money at the beginning. We just want to make sure that when we open, we have built enough occupancy to lose less with the hotel open than with the hotel closed.
To Alex's point, I mean, the other thing that's going to impact us down next year and the year after, if people have renovations planned, all of a sudden their reserve for replacement budgets or balances are significantly less than they had anticipated that they were going to be. And ownership's going to have to come out of pocket to backfill those reserve for replacement budgets for planned renovations, either in 21 or 22. And obviously various ownership groups are going to have to look to the operators and the brands to get waivers or extensions on some of those renovations as well.
This is really a lot to take in, and I know that we're, all of us working extremely diligently to figure it out. And a lot of, what we're hearing, in days and the weeks to come, we're going to get new answers. And, I'm very hopeful that we're going to find new innovative solutions and potentially new revenues and additional benefits that come out of this crisis. We wanted specifically to leave some time for all of our viewers to have a chance to network and speak with you guys individually. For those that arrived a little late, we're going to do some breakout rooms. You're going to see on your screen a little pop-up window that says, please accept a breakout room if you want to stay and have a chance to speak with the speakers. Please hang out. We'd love to communicate with you. And, on behalf of all of us at ULI, this is a really trying time, and I firmly believe that if we stick together and we maintain informed and we communicate, we'll come out of this better and stronger. So on behalf of all of us, I just wanted to thank all of our speakers for taking the time to be here, and all of our viewers, you guys, for coming. Thank you so much. There will be more Caribbean ULI webinars. Thank you.
Thanks, Adam.
Thank you. Thank you, Adam.